Hey, everybody, Tom Gentile. Welcome to my Profit Strategies podcast. This is my Friday podcast that I do on Thursdays. So, the Thursday afternoon, Friday morning podcast for March 1st, 2024. Glad to have you sitting in here with me. I took the week off last week. I actually was thinking about taking this week off, but there's just so much to talk about here. I mean, I want to talk about the markets. They've been stalling out. I mean, not a lot has changed in the stock market here in the last 2 weeks. Bitcoin, boy, there's a lot happening here. Woo! I mean, people are asking me when I'm going to retire, and I keep telling them it's not going to change my life. So, but these are some life-changing numbers, absolutely. Where do we go from here? I want to talk about that too, and a couple of my thoughts on it. And then I want to end today talking about my favorite pattern into the summer. So that is the plan for today. Hope you guys are doing well out there. I'm looking and I'm like, gosh, it's March. It's March 1st. It's almost March 1st. It's March 1st if you're hearing this. What Groundhog Day was a month ago. 6 weeks of winter. That means we got 2 weeks left. Actually 3 if you really want to argue about it, with the first day of spring coming afterwards. But what else happens in 2 weeks? We have March options expiration. All right, that we're going to have. We're going to have not only monthlies, weeklies, but quarterlies. There's a triple witch coming up. So quadruple if you want to argue about it when you add in the futures contracts and derivatives. But yeah, I mean, take a look at what's going on with the S&P here so far. For look at year to date. Okay, so year to date numbers are kind of coming out like this. I mean, we have been on a steady climb since the beginning of the year. S&P was trading around the 460s right out of January. 470. Let's call it 470. And I mean, here we are kind of bumping out just above 500. So we're up about 7 to 7.5% so far this year. You realize that last week when I missed, we were still at 7.5%. So really the market market hasn't really done anything for at least the last week. Maybe you could add another couple days on that. A lot of big names out in the marketplace are saying this is going to be a tough year. Election years typically have double-digit years to the upside, but when you already come out of the gate with 7.5% just in the first 2 months of the year, the rest of the year could very well be, we could all be kind of trending sideways to slightly higher, and that big question that's going to happen in November: who's it going to be? Who's it going to be? I mean, everybody's just going to, this is going to be another one of those breath-holding years where the fate of the economy, this is going to be the most important election ever since the last election when they were saying that. I get this question every once in a while. I'm going to say it the way that I said it before. What does the president do directly for you? What does Congress do directly for you? Yeah, we get some indirect benefits here and there, but you know what? You and only you make your future. Don't rely on the government to make your future for you. Don't rely on one side or the other to dictate how you feel, how you think, and of course, how you move through life in the future. All right, that's my Tony Robbins for you. Again, S&P stalling out, and I think that we're going to get a sideways to slightly higher move as we head into the rest of the year. I mean, we could move higher in this month of March and maybe even to April. Then we go into sell in May and go away. That's a pattern where between May and November, the market typically goes sideways to lower. Implied volatilities go higher because of all the angst that comes up heading into October. And of course, we got a lot of angst that's going to happen on election day too. I look at the overall numbers in the S&P, and here's some new things I'm gonna tell you that I'm seeing, just in the last couple of weeks. So I ran the high-low ranker, And the high and low ranker, basically, it's something I run. It gives me a look at all the S&P 500 stocks or any group of stocks that I want. I picked the S&P 500 because I want to look through and I want to see what's hitting new year-to-date highs. What is still going up? And first of all, I'll let you know this. Out of 500 stocks, about 80 of them, all right? That's about what? 17, 18% of the S&P 500 is on new highs for the year. Okay. What's interesting is that it's companies that you're not seeing. I mean, General Motors, new highs for the year. CarMax, new highs for the year. Yeah, I know some of you are saying, NVIDIA, new highs, AMD, new highs, Salesforce, Meta, new highs. Yes, I get that. But Hormel Foods is in there too. All right. Best Buy, yeah, the retailer that when you go through Best Buy, it looks like a garage sale. I mean, I went through a Best Buy not too long ago, and half the stuff was off the shelves. Immediately, you might think, man, they had a blowout sale. Man, there's a lot of people in here. But you know what it is? They're not restocking the inventory as fast. But hey, whatever, it's working for them. Check this out. American Airlines, Southwest Airlines, new highs for the year. Lowe's, Home Depot, Sherwin-Williams, new highs for the year. Tractor Supply. I mean, it is a plethora of different companies in different industries that are leading the charge. Now, I say that because I want to take you to the ones that are making new lows for the year, right? There's not as many. In fact, running this today, I really only see 9 or 10 stocks that are making new year-to-date lows. It's a couple of those 9 or 10 stocks that really got to have you thinking. I mean, one of them right off the bat, I could see two of them right off the bat are making me scratch my head. Apple is making new year-to-date lows right now, folks. Okay, I know you can't see this podcast because it's audio, but I want you to think of a stock that starts out high for the year and goes lower. And that's where we are. Apple was at new year-to-date lows. Yeah, I mean, you could go back and say, well, Tom, Apple was at $180 a share, 181 back in January in the first week. Yeah, they were. They were also at 195 by the end of January. And now they're right back down to 180 again. So, if 180 is the low and 195 is the high, and currently we're at 180, we're at year-to-date lows. That's Apple. Okay. Another one that I thought was interesting was Take-Two Interactive, another tech company, another tech stock at year-to-date lows. Then you've got some stuff out there that like J.M. Smucker, apparently peanut butter. I mean, I'm still on this sugar-free kick. All right, I'm still on the sugar-free kick. I'm down. I'm not here to talk about how much weight I'm losing. It's I think I'm hitting goals. I'm hitting some goals that I like. It's slowing down though. It's slowing down. But one of the things I was thinking about is I have not went to the pantry for peanut butter much this year, and I don't know why. Maybe I just don't have the cravings for it like I used to. But you look at J.M. Smucker, I'm like, wow, year-to-date lows. Okay. Here's a couple. Here's a couple that all kind of fall in the same area. Amgen, year-to-date lows. Humana, year-to-date lows. LabCorp, year-to-date lows. All kind of sitting in the same industry. And these are ones, and I'm talking about these, there's 8 or 9 stocks in the S&P 500 that are actually hitting year-to-date lows today. Now, there's a couple that are really close, like Biogen is very close to year-to-date lows. Okay. Insulet, very close to year-to-date lows. But it's funny when you look across this and you see, Walgreens is pretty close. That company got booted out of the Dow, and Amazon got put in this week. So, I mean, that's no surprise at all. You take the one out and you put it in. Now, here's another one that's pretty close. Alphabet or Google, for those of you that are old school. they're just 4% off year-to-date lows. So it's not, when you see the market running up like it is, it's not what you think when you go in and you start looking at who's making the big moves so far this year. All right, so outside of that, let's talk about a couple others. One area I think is ready to run higher is commodities markets. Certain commodities I think are ready to run higher. You take a look at, so I'm going to talk about a couple of them. Let's talk about alternative assets. And the first one that comes to mind is gold. Okay. And you can go and look at gold in any account. You don't have to have you don't have to have gold sitting in your closet. You can go look at GLD and you'll see GLD has made, it's had highs this year of 191. It's had lows this year of about 184. And we're currently trading pretty close to 190. We're getting close to the year-to-date highs on GLD at 189 and change. Gold's kind of sitting right now. It's sitting in the catbird seat, and it's waiting. It's waiting for news that is going to be favorable to gold. What is the news that I think is going to be most favorable to gold? A cut in interest rates. Because a cut in interest rates will be good for stocks, but I think it would be good for gold as well. Because, while I look at gold and I wonder why in the world has this thing not moved? It really hasn't moved higher much in the last, 4 years? Hasn't broken out to new highs. And I think the interest rate is stifling it right now. But you also got to pat gold on the back, because interest rates, which have gone, over the last couple of years, have had record rate moves. I'm not talking about record rates. I'm talking about record rate moves from very low to where we are now. Yeah, you could argue that, hey, Tom, back in the 70s and the 80s, the late 70s and 80s, interest rates were in the teens. I know that. I'm not talking about that. I'm talking about going from the low rates that we were to where we are now, and the fact that we haven't started dropping. You got to give gold a pat on the back, because it's holding it. It's holding out. It's there, and it's waiting, I think, for a move to be made. A move to be made for lower rates. Now, lower rates might not come right away, but they're coming. They're coming because of anything. I don't think the U.S. deficit can remain at the level that it's at right now with the amount of interest that's getting tacked on. The Fed's going to have to do something. Fed's going to have to do something. And this is an election year. The last thing in the world that we want to see is rates going into the election year where they are right now. And still, it's just so many inconsistencies here with this market. But if rates start to drop, I expect to see GLD above 200. All right. Bitcoin. Hey, who's got their head under a rock right now? Bitcoin absolutely just it did it. It really made the move. You're seeing some outflows. You see a little bit of outflows with something like coming out of GBTC, but those will slow down. The amount of inflows that are coming in through Van Eck, through BlackRock, through all the what is the 11 or 12 ETFs that are there are absolutely killing it. So what made Bitcoin go from what was it? Just you take a look at a chart of, say, Bitcoin, and you look at don't look at the 5-minute chart, folks. The 5-minute chart will drive you nuts. You want to go out and look at day charts, and you want to look at what's happened just in the month of February, because we leveled out in February for about the first week around the 42 range. And then all of a sudden the breakout, we stair-stepped from 42 to 52. We leveled out again, and look what happened this week. 52 became 62. We hit 64 earlier this week. And so what's going on is I believe you're seeing two things happen. Number one, you got all the positive talk of all the inflows that have happened with these new ETFs. They're reporting data that is just off the charts. But you know what else is happening? A lot of short sellers are having to cover. They're running for cover. And that's why you saw a lot of that move from the 50s into the 60s. So Last time we were talking about Bitcoin, I had support levels at 45 and 39. I mean, you know what the support levels are now? The support levels at 52. You can now bring that up, quite a bit for that piece. Last time I told you all a couple weeks ago that I had those, the next stop was going to be around those all-time closing highs at 67. We could hit that this weekend. We could hit that. Heck, I'm running this podcast on Thursday afternoon. We could be there right now. We could be at 70 before the weekend's over. And why would you say that, Tom? Why would we be at 70? Why would Ethereum be potentially, Ethereum, by the way, is hit 34? Why would we be, if we look at Ethereum, for instance, which is still running the caboose right now, 34, 35 is what I have. I'm looking at it right now. But, how could Ethereum be at 4,000? I mean, it's very simple. You got short sellers that are running for cover. You can get a little bit more news. The fact that Bitcoin ran above 60, it ran back down in the 50s, and then the buyers came all back in again and kept it above 60 for the last couple of days. I mean, that right there is bullish enough. That's something to be said. So yeah, I mean, this weekend we could see new all-time highs. Ethereum, I 2 weeks ago I said Ethereum was topping out at 2,800. That number's gone. All right, that number is GONE. You're looking at 3,000 right now. That round number is going to be your resistance on Ethereum. Big moves that's happened this week. Are we done yet? That's the big question that people are asking me, and the answer is I don't think so. I mean, there's still that buy the rumor, sell the news thing that's not going to happen for another 6 weeks, right? So, February 1st, Punxsutawney Phil stuck his head out of a hole and said that there's 6 more weeks of winter. And Punxsutawney Tom is telling you right now, there's still 6 more weeks of bullishness just from the buy the rumor, sell the news event. And what I'm talking about is the rumor news is the halving. The halving, for those of you that need a quick refresher, is when rewards to miners for their efforts in mining Bitcoin are going to fall once again. When I was mining Bitcoin, this was more than 10 years ago now. The rewards were 50. You got 50 Bitcoins when you solved in the equation. Then that got halved to 25. And then it got halved again to 12 and a half. And then it got halved again to 6 1/4. And in 6 weeks, it's going to be halved again, where miners are working harder and getting rewarded less. They're only going to get 3.125 Bitcoin per block reward. So less mine. But you know what else that means? What's been happening is a miner, like think of a gold miner. When they mine gold, you know what they're doing? They're not hoarding it. They're selling it because they have to pay for equipment. They have to pay for labor. They have to pay for their mining costs, and they put money in their pocket. Well, what's going to happen? There's going to be less coin to sell. There's going to be less coin that's going to be on the sell side. That's going to happen starting, I believe it's April 20th is the date they keep tossing around. That means less for miners to sell. That means less being on the open market on the sell side. That's a good thing for Bitcoin bulls. Then there's what happens in the next 12 to 18 months after this halving, and that is the cycles. The cycles I'm talking about are, if you go back and you look at what's happened prior to and after the last 1, 2, 3, 4 cycles, you see continued runs up post halving, right? Post halving. So, there's skeptics out there that say, a top is coming. Get bearish on Bitcoin. I mean, first of all, there's no guarantee that anything I'm saying is going to happen in the future. I'm a pattern guy. I trade patterns. And the pattern I'm in right now is bullish Bitcoin, bullish Ethereum, bullish certain altcoins. But that pattern does have a lifespan to it if you look at it over and over and over again. So, that's the after hash or after halving that runs the Bitcoin bull for another 12 to 18 months. So that means we could see this run into 2026. Okay. When do you know there's a top coming? When do you know there's a top coming in everything, in anything? Well, I'll tell you when. Number one, when it's practically the only thing being talked about. So I want you to think about this right now. Turn on Bloomberg, turn on CNBC, turn on any financial channel. One idea that a top is coming is when they stick, remember when CNBC used to stick the Bitcoin price on its own little, they have all the ticker going across the bottom. Then they had above the ticker, they had a spot that was just for Bitcoin. And they were running a real-time Bitcoin ticker on its own. Hasn't happened yet. Okay. And the reason why is because everyone is, a top is when everyone talks about Bitcoin. Yeah, the guys on financial news networks are going to talk about it because it's something worth talking about. It's the story now, but it's not everything. And it's not being reported on your local news. When that happens, everybody knows about it because not everybody watches CNBC or Bloomberg for that matter. Here's another way everybody knows about it. When we start seeing those crypto commercials running rampant again. And I'm not talking about just on financial networks. You start seeing crypto commercials and you start seeing, commercials for crypto.com and maybe not Coinbase, but you'll start seeing commercials for, I remember GBTC back in 2021. It's like every other commercial was about GBTC. We're not seeing that yet. But when we start seeing that again, that's bringing the retail, that's bringing the asset to the retail public and just slamming it down their throats. So that's not happening yet. Local news report, not happening yet. Everyone talking about crypto again. Nah, it's not happening yet with everyone, but that might start happening really, really soon. But you know what? Here's what else is not happening, or here's what else is happening. Bitcoin is the one everyone's talking about right now. Ethereum, not so much. Altcoins, not so much. That's good. That's good for us for the longer term. And I'm talking about a year out. So here's the cycle, folks. You look at a 4-year cycle, which has happened now 4 times. First comes Bitcoin, then comes Ethereum, then comes altcoins, then comes the top. Okay? Yes. Put that in your brain. First come Bitcoin, then come Ethereum. Then comes altcoins, then comes the top. And what I'm talking about is that, Bitcoin right now is all the rage. That's going to turn into Ethereum pretty soon, and Ethereum is going to be talked about a lot. And, what's going to happen with Ethereum is it's going to get approval as an asset that can have a spot ETF. And then, there's going to be a dozen of those that are going to come out because, one guy, BlackRock, one company is out there filing. All the other ones are in waiting. And the minute that gets approved, then you're going to see 10 or 11 others are going to jump in the very next day too. We still have options that are going to be coming out literally any day. I expect to see options on ETFs like IBIT. Those are going to come out too. By the way, that's the way you can be bearish. That's the way you can create protection against Bitcoin, by putting on low-cost insurance against your Bitcoin. That I approve of. Okay. Then, getting back to the cycle. So when I say first comes Bitcoin, then comes Ethereum, then comes altcoins, then comes the top, this all happens over a multi-year span. So we could see, Bitcoin really was last year's run up, and it's going to change over from Bitcoin to Ethereum this year. And I think later this year and into next year, the altcoins, that's the Doge, that's the Shiba, that's the those types of coins. Okay? I'm not saying go out and buy those. I'm just saying those are the ones you're going to start to hear a little bit more about. But those really start to pop when Ethereum makes the move. So there's that. And then your top comes when everybody's doing it. Everybody's hearing about it. You start hearing all those YouTube guys that were construction workers or pizza delivery drivers last year, and then they become crypto experts. That's when you know the top's coming. It's not here yet. Here's my prediction. I mean, is 70K before the weekend over a possibility? Yeah, it is. I mean, we're getting these huge price swings right now. But you know what? 52. 52 could be a swing. We could swing back down to the low 50s. We could swing up to 70. That volatility is definitely there. Okay. But here's what I'm looking for. I'm looking for that 5 to 6x return after the halving occurs. And we're talking about something that could take us into the end of 2025, maybe beginning of 2026. Yes. What does that mean? That means something like a 350,000 number on BTC. Okay. What's a 5x do to Ethereum? A 5x to Ethereum puts that thing in the 18,000 range. Yeah, these are all potential moves based on finite supply, based on increasing demand, increasing volatility. It's absolutely a possibility. All right. I mean, when do I? And then the other question that I keep getting from folks is, when do I start selling? When do I start dipping into my vault and start converting? And honestly, I think I start to do the conversion. I start to think about this at 100K. At 90 to 100K is when I start to think, let me take some money off the table, because it's been a good run and it's going to continue. But, why? It's just good common sense that you start taking profits, big profits, if they come to you. So that's just my thoughts there, folks. All right. So lastly, but not least at all, I want to talk about my favorite pattern in the markets right now. It's not cryptocurrency. It's not SPY. It's not gold. It's oil. And I did a webinar a couple weeks ago on oil and energy. Some of you were there. Some of you were not. If you weren't there, I'll tell you what I want you to do. I want you to go down to the links in this podcast, and I'm going to leave a link there for the oil and energy pattern, all right, that we did a couple weeks ago. It's my favorite pattern right now. I mean, of all the trading styles that I employ with stock and with options, there's basically 5 trading styles that I like, that I teach, that I use in my own trading. There's momentum, all right. There's and momentum is like trend. There's contrarian, which is really like going the opposite of the herd. There's volatility, and that's a pure out option play. There is statistical, and a lot of times that's a pure out option play too. And then there's seasonal and seasonality. And see, that seasonality is not just holidays. It's not a holiday pattern or a tax season pattern. It's a period of time where I represent, where I'm looking at stocks that represent the best time to get into and the best time to get out of them, based on something that recurs over time. And so what's recurring over time right now is that mid-February to mid-July pattern, where oil and energy typically go higher. In 12 of the past 17 years, it's about roughly a 70% success rate. You take a look at mid-February to mid-July. Let's just look at USO. USO has been higher. When you take a look at mid-February to mid-July, USO has been higher 12 of the past 17 years. I'm focusing on this sector because everybody here listening to this podcast can type in the letters USO and look at those charts. Last year was about a break even. Okay. But now I don't just go there. I take a deeper dive and I look at something called the money calendar. By the way, folks, I'm going to be talking about the money calendar next week on my YouTube video. So if you want a deeper dive on the money calendar, join me next week. But for right now, the money calendar is a way that I can go in and look at stocks. I can look at ETFs, and I can get an idea of what's the best time to buy and what's the best time to sell those in the 30-day realm. So I take that 5-month pattern, that 5-month oil and energy pattern, and I start looking at right now, what's the best thing to do right now? So I go look at USO, and you know what? What I found was that during this month, we got about an 80% chance that oil moves higher right out of the gate. Starting that mid-February, mid-July, just that first part, we got that move. And what does that move do? Better than 4.5 points. So I know that I have a longer term pattern. I know that I have a shorter term pattern right now in something like USO. Take a look at USO. It's actually gone higher in the last couple of weeks. I think this might be the start of something. But if USO is trading at $71 and I expect it to move higher over the next few months, what can I do? I mean, a $4 move represents about 6% of the stock, but that's just the first 30 days. This pattern tends to run better than that. But I could buy the stock. That's going to cost me $7,400 today for 100 shares. What about call options? What about call spreads? The right to own the stock. That's a call option. A call spread is the right to own and the obligation to sell, all in one nice little wrapped up gift package. So how would I use options on something that is a multi-month pattern? Well, if the pattern ends in July, guess what? I look at July options. I don't want to be buying March options on a pattern that ends in July. That's stupid. I want to buy July options that end in a pattern in July. And I want to look at the call options. And I want to say to myself, if this pattern only moves $4 and I buy the at-the-money call, if the at-the-money call costs me $5, I'm not going to make money on a $4 move. It makes no sense. But what if the pattern moves more? What if the pattern moves $10? If the pattern moves $10 and I can buy the at-the-money call option for, say, $5, that's a potential double. That's where we just use common sense. If I see a potential $10 move, if I see USO going to 85 by mid-July, and the 75 calls in July cost $5, right now I think it costs a little more than $5. But do I see a path to profitability there if all my assumptions work out? Yes. What about call spreads? So it cost me $7,400 to buy the stock at 74. Maybe it cost me $5 or $6 to buy the call options. Now there's some time value there that we got to hurdle up against. But then what about the call spread? I can put on, say, the 75.80. That's really close. We don't even have to get to 85. That's going to cost me maybe $2.20 or $220. That's a lot less than the call option. That's a whole lot less than owning the stock. And if we're above 80 by July's expiration, that's more than a double. That's the way you look at a multi-month strategy like this one. All right. So, folks, that is a wrap on my podcast for today. Again, kind of summarizing, look at the markets. We've made a big run here in the last 2 months. Is it time for the markets to take a pause? Bitcoin made a big run just in the last couple of days. I don't think it's pausing. I think the volatility is still going to be around for a little while, and I mean a little while. I mean the next few weeks, and we could run up to new all-time highs. We could run back down just as fast. We could give back in the next few days what we've gotten in the next few days. I think that's the most exciting place to be looking at right now as a trader. And then, of course, the non-excitement is where you make your money. And non-excitement right now is by looking at rules-based patterns. I gave you one today. Take a look at it for yourself. Do your own homework. Don't take my word for it. Have a great weekend. Thanks for joining me. And again, like I said, check out the links below for a link to my oil and energy report. I'm going to put that out there for everybody. And of course, check me out next week. We're going to do a video on the money calendar for the month of March. Have a great weekend. I'll see you next week.